stocks ended a volatile week lower, with investors rotating further away from growth and technology stocks that had outperformed early on during the pandemic. The Nasdaq plummeted nearly 3%, clocking in its worst week since 2020, while the S&P 500 and Dow accelerated losses. A day earlier, the Nasdaq Composite dropped more than 1%, adding to losses after sinking into a correction earlier this week. The Nasdaq has fallen nearly 12% from its most recent record high from November through Thursday's close. Shares of Netflix, NFLX, sank more than 20% after the company posted a first-quarter subscriber growth output that fell far short of expectations, with the streaming giant projecting 2.5 million new users for the first quarter of 2022 versus the 6.3 million anticipated, according to Bloomberg. That shares of Disney, DIS, and Roku, ROKU, fell on sympathy. Meanwhile, Peloton, PTON, which had been another darling of the so-called stay-at-home trade during the pandemic, recovered some losses after falling to a near two-year low on Thursday, after CNBC reported the company was cutting production of its fitness products due to flagging demand. It is anything that is released about the company's investment results or prospects that doesn't meet or exceed very elevated expectations leads to gigantic disappointment in the form of a share price decline. This is indicative of companies that, again, have valuations that have been bid up by investors. The drop in many closely watched, highly valued technology stocks, and the broader stock indexes, also came alongside ongoing investors' jitters about a potential near-term move on interest rates from the Federal Reserve. The Fed's next policy-setting meeting is set to take place next week, with market participants largely pricing in a first interest rate hike out from the central bank after the Fed's March meeting. These expectations for higher rates and less liquidity from the Fed this year have also been a key driver of recent equity price action, many strategists noted. I think there is a rotation going on towards those areas of the market that have been neglected for a long time, not just months, but years.